Now we're moving on to external users. So external users are users who are involved in the business but not directly. They are indirectly involved in the business. So they do have a part to play, but not a very close part to play with the business. Right? So the first example I have here are banks. So banks are going to use our accounting information to predict the business's ability to repay loans. So remember, a business can be financed through loans, right? So they will go to the bank, they will go to FCB, and they'll be like, we really want to take a loan out for $400,000. The bank would not just give you that loan just like that. They would look at your accounting information to determine whether you would be able to repay the loan in a specific amount of time. So that's the reason why the banks want to look at your information. The next one we have here is investors. And investors look at your information to determine whether they should invest or continue to invest. So if your business is profitable, then the investor would be like, well, okay, my investment is a good investment. I should continue to invest. On the other hand, if you are making losses, then the investors will obviously accrue that said loss. And so it would not be prudent for them to continue investing. The next one we have here is stakeholders, which kind of encompasses everybody, really. And they would use this information to make better decisions as to whether to purchase stock. Next, we have customers, and they use this information to assess the financial position of the business. So they will look at our information, they'll be like, okay, I'm going to purchase from here, or I'm not going to purchase from here. That's why they would look at our information. It's neither here nor there. They don't really need to have access to our information. But if they do, that's the reason why. The last one I have here is taxing authorities. So in Trinidad and Tobago, we have what is called the Board of Inland Revenue. And the Board of Inland Revenue would look at your business's profits, and they will tax you corporation tax accordingly. So they look at our information to ensure the accuracy of taxes declared and paid by your company. Another one that is not listed here, but that was pointed out in my class yesterday, and they were absolutely correct, is accounts payables, also known as creditors, also known as suppliers. So creditors are persons who we purchase goods from, but we haven't yet paid them. So we still owe them money. We still need to pay them money. So they are referred to as creditors or accounts payables. They, similar to the banks, will look at our accounting information to determine whether or not they should advance these supplies to us on credit. So whether or not they should give us this stock and say, okay, you can repay within 2 weeks. So that's why they would want access to our accounting information to determine whether or not we would be able to repay them at the end of a specific period. And that's external users. So do we have any questions?